Okay, hello and good morning, everyone. Today is Wednesday, January 13th, and I'm Michael Boutros. Good to be with you guys for this live intraday strategy webinar on SB Trade Desk. Mario, Minho, Eileen, Permendra, thank you. Good morning as well. So, got a lot to talk about today. We've been looking at a lot of these crosses. The dollar crosses are also coming back into focus. As far as event risk is concerned, you don't really have much in U.S. trade today. You do get the oil inventory numbers, which could push around crude prices. But really the major event risk heading to the end of the week, guys, is still going to be the advanced retail sales print on Friday. And certainly that's going to be a good gauge of consumer spending in the month of December. So we'll be checking that out. Likely to be the biggest event risk for the dollar crosses. Chris says, good morning, Mike. Hope all is well. Have a trade on and one pending. Can you please take a look at Aussie Dollar and Euro Oz? You know what? Let's jump into Euro Oz first thing. That was on yesterday's update. And we'll definitely take a look at Aussie Dollar. I've been all over both of those. So let's jump right in. As always, guys, feel free to throw any questions, trade setups you want to review anytime throughout the session in the message box. So last night's update. Let's take a look. Okay, so Euro Oz, here's what we're looking at the daily. I don't want to spend too much time over the same thing as far as, where we were. We came off of a big region of resistance. We highlighted this on Sunday. It was 158 to 158.57. Keep in mind the ATR here, Chris, is massive, right? You're looking at 200 pip on a daily basis. Just something to take note of. As far as key support on the trade, you're really looking right down here at 52.58, 52.60. As the major support. You have a former lower median line parallel, which comes right through that, a basic 38.2, the advance from the December low, and the 50% retracement of that range off of the November or September rather highs. So that kind of lays right there. Here's what the intraday chart looks like for Euro Oz, and here's what we look like last night. It's pretty much steady as she goes. That low that we had made last night at 153.44 actually has been preserved. We went back for a rally. We failed right at the former weekly opening range low and then came right back down again to tag that 53.44 level. A slight adjustment to the pitchfork here, guys. If you look at yesterday's report, we're using the high that we actually made, that concrete high. If you take that down to the secondary high there, right around 57.65, it looks like it's fitting price action just a little bit better. So I'd be watching this. If we do rupture the top side here, it's going to invalidate our level. We're going to go ahead and bring down the bearish invalidation level down to 54.59 from 55.22, which is where it was last night. We're going to go ahead and bring that down. If we see a top side break, you're likely to see a little bit of a recovery here. Long story short, we like to play the rebound off this region. We're looking for that move into 52.60, the 53 handle, this region right here. Major key confluence support. All right, that's right down here. Momentum has been giving you some divergence into the lows. So Chris, just on a near-term prospect, I would want to watch price action making a lower low, the oscillator making a higher low, followed by a trigger break. So in actuality, there is the risk for a run higher here near term. Largely speaking, as long as we're in this formation, I'd like to sell rallies in Euro Oz. So we'll see if we can't get another sort of stretch into the open of US trade here to get us back on that trade. Chris, questions on Euro Oz, man. I want to make sure we're on the same page on that one. And give me 1 second. Let me just launch the 5-minute charts here, see if we have anything interesting. Chris says, no, we are on the same page, my man. All right, right on, Chris. I like it. And again, it's one of the trades that I've been really active in. Keep in mind, again, I just want to really stress this. Typically, the scalps we're looking are 30, 20 pips. This is a 52 quarter of the daily ATR. So it's a nice sizable trade there. Okay, here's what the 5-minute or the 1-minute chart looks like, rather. Let me bring this into just a 5 and see if we can identify any triggers. So again, we're liking this formation to hold. Support trigger right there in play. And actually, this might be a 3-touch right there. Okay, let's look for a consolidation break here again. If you take any short exposure, you really the ideal short would be against the actual high that you made for Tokyo and Sydney. So we'll see if we can't get a stretch high. On a near-term scalp here, guys, again, the stop would be against that London high if it doesn't give us that rally into the U.S. Open. So just keep in mind that we're coming into some support here. So I wouldn't get too aggressive on the short side. Remember that key major region right at 53 is where I'd start to sort of wrap things up, maybe take some profits off. But that is Euro Oz. It's been a beautiful play. Any questions before we move off? Okay. And don't forget the bearish invalidation level lowered to 54.60. Next up on tap was the Kiwi Dollar. I just want to touch on that briefly. Another trade that's sort of steady as she goes. Still within the confines here. Here's what we were looking at last night. And basically, I had put a piece on this on Daily FX, guys. I linked it to the report. You know, the basic premise was that the daily chart was coming into a major area of support. You're looking at the lower median line parallel off of the December highs. You're looking at the basic median line off of the October highs and a 786 retracement off the November low, all right there. So momentum was holding 40 as support. Price was at support. The risk for a rebound is there. We're only playing the rebound within the confines of the downtrend. And it's very important. We talk about this a lot. When you're taking counter trend trades, you want to be a little bit more nimble. Maybe you reduce your leverage size because I don't think anyone's going to argue that this is a counter trend trade to take the long. But there's been plenty of opportunity. Here's what Kiwi Dollar looks like on the daily. And then we'll go into the 30-minute in one moment. So you can see, again, those confluence trend lines and median lines, both of them right in line with that 786 retracement. You saw 2 days of testing that low, couldn't do it. Momentum still holding 60. Again, the risk was for a rally towards 66, and this is actually where I was looking for some short exposure. The high and overnight was 65.90, so we didn't quite make it into that 65.92, 66 region. Here's what it looks like on the near-term chart. Again, the descending channel formation, which is embedded within the confines of this larger pitchfork. That broke last night, shifting the buys to the upside, and we're going to continue favoring the long side while above that 65.25 zone. Same, no change to our game plan. In fact, you had this trigger last night, which we had on the report, which never gave out. And in fact, that continued to hold until that break to the upside. On the way back right now, we're still checking that same trigger support, and it looks like it's holding at this point. So this is really the break that you would need to validate a larger turn in Kiwi Dollar. Near term, the risk is still to the upside while above 65.25. Okay, so we're looking at buy dips against that low. We're looking for a break of the 66 to offer a much more substantiated rally. If we make it into 66 and we fail, I wouldn't get too aggressive on it because, again, this is a very strong downtrend. We're just playing the rebound. The one thing I do want to note is that if this was a legitimate break of this channel, you'd expect to see maybe a check of this as support and then a move higher. We'll see if we get that today, but this is sort of a pitiful formation break. I'd like to see this travel a little bit more further to the upside. So the conviction's starting to wane a little bit, but long story short, 65.25 shorts are at risk while above that region. Kiwi data is light. Again, you're looking for the U.S. retail sales report. China data last night was stronger than expected, and obviously helped some of the risk pairs, Aussie, Kiwi, move higher on the day. If you look at the relative performance so far, start off the session, you can see that the dollar is still pretty strong. These are performances year to date, okay, guys, just from the start of January trade. I just wanted to highlight that the Kiwi and the Aussie are the biggest losers on this session. In fact, Kiwi was the biggest loser on this, or Aussie was one of the biggest losers on this session, down 4.4% until this recent rally has brought us back a little bit. But broadly, dollar strength continues to be the dominant theme here. If we just look at the one-day performance overnight, you can see a little bit more of a mixed picture. Aussie and Kiwi now starting to take back some of those losses, okay? Swissy, Yen, Euro, the pairs that were benefiting really a lot more on the risk-off environment have started to come off. What does that mean? It's all the same trade, guys. So wouldn't be surprised to see risk continue to rally higher. And in fact, that's what you're seeing today. A quick look at the relative performance of the equity indices so far. You can see that the Nikkei Asia Pac had a decent session. The Shanghai index was actually lower on the session, down 3.4%, but you're broadly seeing some nice gains over in Asia. European markets are also more than 1% in the black so far today. U.S. equity futures also look poised to open higher. Dow Jones looking for 121 points to the upside, S&P up 16 handles ahead of the open. So my point being, guys, that the whole, as Jamie's continued to suggest, the market's sort of moving all in tandem. Risk off, you're going to look to see the euro strength, the yen strength. Risk on, you'll see those start to come off a little bit. You'll see that the Aussie and the Kiwi will tend to perform a little bit better. Obviously, if we do see a turn in commodity prices, that's something that we will want to look for as well. A quick segue here, guys, if there are no other questions on the Kiwi. Mark says, Kiwi, that maybe I can catch a long-term bottom feeling again. I don't know if I want to make a long-term bottom trade out of it, because remember, I'm going to take a quick segue here, guys. Look at the dollar index. Do you guys remember the level that we talked about? 12,193, 12,204. We tried this on like 16 separate occasions. Weren't able to make one close above this region. Well, yesterday we did. Okay, yesterday we did. So the major resistance that we were looking at beyond that was 12,250. Yesterday's high was 12,245. So the risk is still for a confluence region of resistance there near 12,250. So my point being, before I start to call a longer term bottom, Mark, I think that you want to just leave this a little bit, or open the possibility that you kind of make a new low before you start to rally too aggressively. But Mark, yeah, 12,250, he's got it right down there as well. Big level. Big level. And if that holds, then I'd be a lot more confident in trying to look a little bit more that we may have made a more concrete low near term. Because, if this is going to end up being equal legs, two equal legs up, a simple correction, that screams, a short from that region. So we'll have to see if we can go for a final tag at that 250. Mark, does that make sense, man? Does that help? Here's what the dollar index looks like on the 30-minute, by the way. And again, the high day close, that whole region around 12,204, finally cleared it yesterday. You saw that top side pop. We had interim support at 12,219. That's holding a support right now. The key resistance, still 12,250. He says, of course, just have this feeling again. Thanks. Hey, you're more than welcome, Mark. More than welcome. I do want to see. I mean, I'm on the same side as you of what I want to see happen, but if we're not poised to do that just yet, I think we might have to wait for that data on Friday to see if we can get one more knee-jerk reaction there in the dollar. All right. Chris says, Mike, to be clear, you are looking to sell rallies into 6,600, right, on Kiwi Dollar. So for me personally, I'm looking for a rally into this region. Right now, I've been looking for longs into 66. So this long yesterday got taken out at 65.70, that soft target. I haven't been in an opportunity to get back in the trade, but I'd like to play it long into 66. Chris, it's important to note one thing, man. I don't trade where, okay, I'm going to put a short order here at 66 and kind of walk away. No, when the market reaches 66, I'll be looking for short triggers and momentum. I'll be looking for short triggers on the 5-minute chart. I'll be looking for something to suggest that momentum is waning and give me that push to go ahead and press this short. Doesn't necessarily mean I'll be short as soon as we reach 166. If this thing rallies through and kind of just surges right through, I'm not going to just start pressing a short. I'll want to see that momentum signature fail at 60 or give me some kind of trigger. Does that make sense, Chris? It's a little bit of a different mentality when we're intraday trading, guys, from your typical swing trades or your typical position trading type of strategy where, it's all about just the levels. When we're trading intraday near term, there needs to be something to tell me to click that sell or buy. Okay, there needs to be that trigger there. We don't have stops at 70, 80 pips. We don't have that luxury in this strategy. We're pretty tight, so it's all about the entries. So as we get into 66, I'll be on the lookout absolutely for some possible short triggers. If it breaks, you're looking for the median line parallel, and then beyond that, you could see a much, much more concerted recovery in Kiwi Dollar. But baseline scenarios, at least you get a stretch into that 66 handle, if not the median line. Make sense? Chris says, yes, it does. Right on, man. And again, the conviction for the downside, if you just look at this pitchfork, guys, came right into it, bobbled there, we broke, came right as resistance, and it held to the T and pushed off. So it gives us further conviction on trying to stay short while below that median line. Any questions on Kiwi Dollar? Again, if you have, or if you'd like, feel free to click on that camera button in the top right-hand corner of your screen to take a freeze frame of any of the charts that you see here today. All right, going through my notes here. Kiwi Dollar still on track. Constructive above 54.25. We said that. Watch 66. All right. So let's go ahead and jump into the radar charts from last night. They were all, two of them were a review of the previous day's setups on Aussie Yen and Sterling Key, both still really nice in play. So here's what the intraday charts, the radar charts looked like yesterday, and here's what Aussie looked like on the back of the Asia Open last night. So a very similar play. Let me just bring up Aussie Yen for you. Here's what the daily chart looks like first. Okay, so remember on, I think it was Monday night, we had highlighted this major key support confluence. And basically you're looking at a 786 long dated retracement, an exact 1618 extension from the high. And you saw that hold right on. Momentum made it back above 30. And we were looking for that recovery into 83.66, 83.68. We just came shy of it. Today's high so far is 83.39. Here's what the intraday chart looks like. Okay, so last night we had noted, again, we had set a really nice weekly opening range, pretty clear cut. We're staying constructive while above that median line, looking for long triggers. You did have a couple of long triggers on the 5-minute charts that gave out late last night. I missed the trigger, so I didn't want to chase this thing, but even if I had gotten in late, it actually would have panned out pretty well. You're looking for about 32 pips per scalp. Soft target at 82.80, which is serving as support right now. Key resistance right here at 83.68. Okay, and this, my friends, is going to be the medium-term bearish invalidation. So while we are looking higher right now, a break above this region is needed to give us the validation that we've made some sort of near-term turn or reversal in price. As long as this holds, we could come right into this and slam right back down again. So I'm looking higher up towards that 83.67 level, where again we'll have to reassess whether we can make it through that key resistance. Sorry, just checking my notes here. Looking good. Key resistance 83.67 still. Yep. On the pullback, one thing I did want to note is watch this trigger right here off the low from the week. Okay, it's a 2-point trigger touch. I just wanted to note that you're making some divergence here. And remember, when we're looking at divergence, the only thing that matters is the close. So if you ever have doubts, bring it into a line chart, and you'll see price action making a higher high, the oscillator making a lower high. A trigger break below that would put you at risk for another run back towards the lower median line parallel. Any questions on Euro Oz? Chris says, same as Aussie Dollar. Oh, well, you know what? Let's look at Aussie Dollar. So this is what Euro Oz looks like. It is similar to the Aussie Dollar, although I think it's, I'll point out the differences in a moment. Before we get started, real quick, here's Aussie Dollar. We kind of bottomed down basically at the late September lows that we made there near 69.35. That's testing resistance at this point. So I think for the Aussie, it's a little bit different of an animal because you're at that resistance where Aussie Yen still has a little bit more to go. This resistance is basically defined by, the 100% extension from the decline off the highs that you made in December. You also have basic channel resistance, former support, now resistance, and the current operative pitchfork, also the median line, comes right there. So for Aussie Dollar, I think it's make or break time. If this doesn't break on the upside, then you're looking for short triggers. But as of right now, I'm off hands on the Aussie just because we're at that critical level. Here's, Chris, here's what it looks like on the near term. I think this is a little bit clearer for you. So It's the same type of formation, except this is already at that key juncture, okay, where Aussie yen is not. Median line, key resistance A367, Aussie dollar, we're already testing that key range. And a break above the median line would shift this focus a lot higher. So steady as she goes as far as the Aussie dollar is concerned. Here's what the chart, here's what the chart looked like last on the 11th, which was what, Monday, right? We were looking at that channel break. We saw that channel break. We tagged 1, 2. That was the opening range low, which held. Remember, the bias was constructive above that region right into 69.35. 69.35 held, and here we are right back at resistance. So now you've set a basic weekly opening range, and a break above this region really shifts the focus to the upside from an objective opening range play and just from a near-term momentum stance. You've seen since that break off the lows, you've seen failure to hold below 30. Here's the bounce, break above 60, right? Here's the hold at 50. Remember, guys, just a quick review. When we're looking at uptrends, we want to find support in the oscillator at 40, not 30. Okay, shouldn't make it that low if you're in an uptrend. With the same respect, when you're in a downtrend, you don't want to see momentum mount 60. That's not healthy. If it's a healthy downtrend, you want to see multiple breaks into overbought and multiple turns ahead of 60. So ever since that slide that we saw last week, that first bit, you saw a quick failure at 60 there, again below 40. Now you're breaking 60 again. 40 is holding as support, back above 60. It's like your classic turn in momentum. All right. So as a disclaimer, I don't have any positions on the Aussie right now. I do think you can get a pullback towards that lower median line parallel before we break. If we don't get it and it does rupture into the open of US trade, don't go chasing. Wait for a pullback where you can take a stop against the Asia low or the London low before we start pressing the longs, and watch that median line, dependent on time, will be somewhere in the 70-60, 70-70 range. Christopher, does that help on Aussie dollar? I've been timid on this one. I actually took like 3 break-even stops on it. I'm a little embarrassed to say, but it's been a lot of back and forth. So I've been kind of trying to focus towards the larger range scalps on the crosses, but for the Aussie, it's been a little frustrating. I really want to see us get above this 70.37 level, but all the scalps I've been taking have been on the long side. Christopher says, it does. I think I'm learning too hard for shorts, or I'm leaning too hard for shorts on Aussie dollar and Kiwi dollar. Yeah, I mean, Chris, are you taking these trades by way of, in the mentality of a near-term trading strategy like a scalp, or on a larger position or a swing trade strategy? Because the only thing I would want to say is this, man, it's very hard. How do I say this in words that make sense? We don't want to be calling lows, and at the same time, we don't want to fight what the near-term trend is saying. It's always going to be prudent to sell into resistance and to buy into support. But you've already made such a dramatic decline on the back of this huge decline to open up the year that I would be very hesitant to get too aggressive on trying to short from here, right? The momentum signature is turning. Dollar index, while it is above that resistance region, could see failure now. This entire stretch off the low that we made on the 28th of last year, I can say at this point, last month, you've only had one down day. One down day. So, Chris, I'm not saying that this can't break higher. I just, you start to think exhaustion when you've seen markets sort of fail. And if this was really going to be a concrete break, I would have expected a surge, something like this, where you've held resistance for months and months and months. Once it finally breaks, you get that rally. Not really getting that here. So I'm hesitant to get too aggressive on trying to go long dollar from these levels. As it stands, Aussie dollar still looks poised for a possible move higher. We'll stay constructive. We're going to bring up that bearish invalidation level just to the median line at this point. So as long as you stay above that, continue favoring, looking for long triggers, buying pullbacks in the Aussie. Yeah, Chris, actually, I'm just going to take a moment to address that. I think actually it's so ironic that you said that, because me and Jamie were just talking about this yesterday. He says, I haven't taken those trades, but my trade plan looks like Euro Oz and Sterling key higher. Aussie dollar and Kiwi dollar lower. I just need to let the price action talk. And that's exactly what you need to do. You know, if you guys listened to Jamie's webinar, I think it was last week, he took a minute to talk about over analysis. And one of the things as you reflect back on 2015 trade, and which we always like to do, kind of sit back, see what our performance has been, where we can really tweak our performance. One of the major things is to not try to overanalyze markets by doing too much cross-market analysis. Okay, I always say it here, and you've heard me say it in the webinars 1,000 times. Take every trade on its own merits. Okay, just because I like Aussie dollar long doesn't mean I like long Aussie against every single cross. So Chris, I would kind of just try to start with a clean slate and just take every trade on its own merits. Try not to look too deep into it. If I just look at price action, I would be with you. Kiwi dollar long against the lows on a pullback is right. See? Yeah. And that's the thing, Chris. I kind of just try to block out everything, look at what price action is doing, and that's the only thing that matters. So I hope that answered your question. I hope I didn't sidetrack too much on that, guys. But Chris, I hope that helps out a little bit. Mano says, so with Aussie yen, negative divergence to close to resistance, would you consider a short? On the 30-minute, Minho? Yeah, absolutely. This is what we just talked about earlier, right? If we see a rally back into this key region and momentum gives us a trigger break, especially if it's trigger that lasted all week long, absolutely, yeah, I would take a short on that, no problem. But I'll tell you what, Mano, I'm out after 32 pips, or I'm taking half off the table at 32 pips. I'm doing something, right? Because it's counter trend. So it's not, I'm going to get short here looking for a break of the lows. So we have to make sure the mentality that we're in when we're trading these positions. Chris says, to be honest, Mike, it's hard to do it this way. I pride myself in being prepared and having a trade plan, but I see the flaw. Yeah, and Chris, it's, you know, every trader goes through the process at a different pace, find what works for you, but try not just to take too much into consideration when you're looking to take a trade, because a lot of times it'll hold you out of great trades just because you see another Aussie pair that might be doing something counter to your bias. And a lot of times it'll cause you to chase trades that might not be the best, might not be the best position for the type of strategy we're working with. So, Chris, feel free to throw out any more questions, man. I'm sure there are others in the room who have similar questions on that. All right, so any other questions on Aussie dollar or Aussie yen? Chris says, exactly. I've missed many trades this year. Thanks for addressing it. Okay, I'm done with that. Ha ha ha. Hey, Chris, man. Don't ever feel any questions on the table, guys. Feel free. All right, let's move right on. Beyond the Aussie yen, we highlighted Aussie or Kiwi yen, which was a trade we haven't talked about in some time. Here's what the Kiwi yen looked like on the back of that major drop. Very similar position. Remember, Aussie made a break of that trendline resistance extending off the yearly high. Until last night, Kiwi yen had not made that break. Well, guess what? Once it broke, first target already hit 77.80. Again, I'm already out of this one, but here's what it looks like so far. So the daily major confluence of that Kiwi short. That's sterling yen. Sorry about that. Or Kiwi yen. Here's Kiwi yen daily. The 786 retracement, very similar to what we were looking at, right? You saw that rally, key resistance near term 77.80, and this is what's going to be the near term bearish invalidation level. If you see this break, look for that rally to extend towards the upper median line parallel. And now that we've made that turn, now that we've made a concrete low, at least for the near term, I'd like to tack on a quick retracement and see if there's any confluence with the levels I've been watching. Okay. Just trying to see which fib is going to work best for us here. And what you want to be looking for is in price action to the left here. I want to see if there's either this fib or this fib is giving us pivots along the lines of where price has been reacting to. I'm going to work with this one for now, and we're going to go ahead and highlight this region. And I'm going to dump that 50% retracement. So on the daily chart, these are the levels I'd be looking for. A break above this, look for a rally towards 78.86. I know that's a whole 100 pips. We're not really looking to scalp 100 pips per se, but that's the implications on a breach above 77.84, specifically on a close basis. So where does this scalp look like? Well, here's what we look like last night. Here's what we look like now. We finally got a down topside break of that resistance trend line off of the highs for the year, for the month. There was a break in momentum that gave you the trigger break to the upside. We highlighted that last night as well. And this was the first concrete break above 60 that you've seen this week. And that means something, guys. That, again, further suggests that we're on the right idea here with at least a near-term recovery in some of these commodity currencies. So we already tagged that first target at 78.87. You could get a little bit more of a pullback here. Looks like that trigger support is holding for now, but ongoing momentum divergence. Price action making a higher high. Again, bring it into a close with the line chart. The oscillator making a lower high. So what that tells me is it adds further emphasis on this trend line. And if that does break, look for a near-term recovery. We're staying constructive well above that lower median line parallel. Does that help, guys? Any questions on the Kiwi yen? Where did you put the stop last night on Kiwi yen? Or I'm sorry, where did you put your trade last night on Kiwi yen and your stop? So I don't have my platform open in front of me, but it was basically after this break. I was chasing. The stop was just 30 pips, a little bit larger. And we kind of just left the limit right here. I put it at 77.80, so just below that region. And it got taken out. But the stop was against the Asia Pac low. Does that make sense? Or I'm sorry, it was actually after the US close. It was this stop right here, whatever this low was. I think it was 76.70. So on these breakouts, sometimes, you know, I don't want to encourage you guys to chase, but sometimes you just got to go with your gut feeling and jump into the position. And especially since we saw the other commodity pairs, and specifically, like if you look at Aussie yen, which already made a break of that same trend line, right? So one of these is leading, one of them is lagging, and with a break like this, I was just all but waiting for this move. So not be surprised if you see a pullback towards resistance or towards that lower median line parallel, but we'll stay constructive above 76.50. And again, a topside break, you're looking at initial targets at 77.80. Nice big range there. Remember, here's the broader trade. And keep in mind, the median line is right there as well. So the implications of a break, you really should see a little bit more of a concrete run there. Bullish invalidation right alongside that lower median line parallel. Eileen says, yes, see that? Okay, thanks. You're more than welcome. And that is Kiwi yen. Okay, so first target 77.8082 has been hit. Breach target 78.88. I already noted that. Last but not least, before we jump into any questions that you guys have, Sterling Key. A little bit more of an expensive pair to trade, but such a massive ATR on a daily basis, putting in 238 pips. Okay, so a nice wide range scalp. If you're comfortable with the strategy, you've been with me for a while, you know, these pairs, once we get technical clarity on them, can be the best scalps of the year because the ranges are so massive. So keep that in mind. The one thing I want to highlight here is that we came off of a major support. Remember, again, we actually had highlighted that Sterling Key in the previous day's intraday update. Again, if you're looking through the radar charts, any currency that's highlighted, guys, has a previous report that we were following with it. And here's what the Sterling Key report looked like earlier in the week. Basically, we had come into this major resistance. The daily showed us a major support bounce here. This is a confluence of the 100% extension and the 618 retracement, my favorite confluences. That rebound came into resistance again at a confluence region, and we're pulling off. So to start things off with the week, we were basically looking against 223.18. We're looking for this consolidation and a weekly opening range break to give us a drop towards that 220 handle. Well, we got it. And here's what sterling key looks like near term. Okay, so we continued to hold that. We broke that low, which was the opening range at 221.34. Initial targets got taken out at 220, 220.11, and then the final target, last night's low, was right on 219.13. The 50% at 219.14. Okay. Again, a wider range scalp. You're looking at about 55, 60 pips per scalp, so just keep that in mind. The only thing I'm not really too keen about is what momentum has been doing overnight, and this is something I woke up this morning, and I was looking for a position on this. Again, as a disclaimer, I didn't get a chance to get any of these positions on sterling key, unfortunately, but you know, when you see momentum kind of holding those lows and price action just going ongoing divergence like that continues to suggest downside pressure may be waning near term. On its face value, the other reason I'm a little hesitant is because sterling dollar, and this is something, again, I don't want to start going to cross-market analysis, but if you look at sterling dollar and Kiwi dollar, they're both coming off some pretty big levels. I know that Jamie, you might have seen Jamie post this chart, guys, but when we're looking at the sterling cross, one thing it helps is to just take a larger look back. And sterling is actually coming off of a multi-decade, okay, trend line support. That's the 1985 low you're looking at there. This is the 2008 low, or 2009 low, excuse me, that you're looking at here. And here's where price action is right now. Again, I'm not saying that you should be levered to the hill on the long side here, but just to show you the implications of what would happen if we do break below this, we got a lot of room to the downside. So as far as the pound is concerned, at least for me, you know, I'm not really interested in taking any too much of an aggressive stance at this point. Keep in mind also that you have the BOE on tap tomorrow morning, and while we're not expecting too much out of them as far as changing the rates, we're expecting them to hold up 5%. We'll be seeing if there's going to be an asset, or if there's going to be commentary coming out with that. The BOE doesn't necessarily always release a statement unless there's a change in policy. Also, keep in mind that they've changed things up now that we get the exact vote count at the moment that the rate decision's released, where typically it wasn't necessarily the case with that with the BOE. So watch those events tomorrow. I do want to be very mindful of this multi-decade trendline support, and just keep that in mind as you're looking at the sterling crosses. So with that sort of on the table, trying to get too aggressive short on the sterling crosses in general has been somewhat of a concern of mine. Here's another trade I was looking at yesterday, sterling CAD, also a very, very big ATR. It's getting a little messy as far as our levels are concerned, but you know, just not really being able to make any progress on the south side too aggressively yet. All right, any questions on sterling key before we move off? Let me get some parallel action there. You can see if I attach this or extend it off the high that we made off the 7th, resistance, resistance, break, support, 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 highlight support right here. 219.14. Let me just see if I can clean this up for you real quick. Bear with me one moment. I know this is going to look messy. I just want to see if there's any compelling. Okay. I'm going to go ahead and leave that on there. And you'll notice on my charts, guys, you know, if there is a retracement that's in gray, it just means that it's a very recent in price action. You don't have a real concrete high or low to work with that you know of. So it's more of a speculative retracement And I do that for myself just to be able to eye, okay, maybe this isn't the low, so I don't necessarily want to put too much emphasis on it. If we do rebound higher, though, those are sort of the initial levels I'd be looking for. Not that 38.2. I'm going to drop that too. All right. Okay, Gary says, good morning, Mike. Sorry I'm late to the room. No worries, Gary. Great to see you. If not covered already, can you take a look at the dollar yen and the Nikkei 225? Absolutely. On the intraday basis, in your opinion, does the Nikkei 225 trend for or tend to forerun the dollar yen, or maybe the other way around? Gary, I don't really do cross market analysis with dollar yen and the Nikkei per se as much. We can do that on the terminal and look it up, but I'm not really sure how that will help us on the intraday position. Give me one moment. Is there any other questions on sterling key? If they're not, we'll go ahead and jump into your questions. That was the last radar chart from last night. Oops. Okay, we're going to lower our bullish invalidation level, guys, or our bearish, excuse me, our bearish invalidation level. I do want to lower that to this region right here. Okay, that would suggest we need to make it back above. If this is going to be a broad head and shoulders formation, way too early to tell. But if we see a break back above that region, specifically the 50, I kind of want to just lay low, and I don't want to get involved in this position too much. So looking to short rallies, sub 2134, 2120, with a break lower, targeting that key 618 retracement at 218.16. Again, mindful of the fact that we're working with a much larger ATR. Okay. Mark says, general comment, I love how you look at general momentum in a pair to define your bias independently from your technical levels, fibs, forks, and trend lines. I guess that is a learning curve and a lot of experience. I appreciate that, Mark. Yeah, I mean, everyone has their own take on how to approach the markets and what they look for. For me, it's just, and there's no, I just want to put it out there, guys, there's nothing special about RSI or special about pitchforks. It's just your proficiency with that tool. I know a lot of successful traders who are explicitly stochastics. They're explicitly MACD. I know one of my closest friends, he only trades the mark. The mark is the only thing he wants to look at. He doesn't give a damn about anything else. And that's fine. But being proficient at one or two indicators, knowing what they mean in combination with price, can be such a strong tell, Mark. And certainly for my experience over the years has been very helpful. So I appreciate your commentary, Mark, 100%. He says the more indicators you use, the more confusing. I agree. Yeah, we call it paralysis by analysis. You have so many lines on your chart. You have so many levels that you're looking at that, you just froze. You don't even know what to do. It makes trading much more difficult. And trading is not an easy endeavor. So we don't want to, we never want to make things more difficult than it needs to be. But good topic there, Mark. Chris says this is a tricky week. It is a tricky week in some parts. It's very exciting for me because of the major thresholds that a lot of these trades extended into. And Chris, we talked about this earlier in the week. Not the dollar crosses per se, but certainly if you look at Kiwi yen, this came into a major long-term fib. More so even Aussie yen at the open of the week coming into a major fib confluence. Right? Even just the basic Kiwi dollar trade. Big support. So these are what we live for, guys. In fact, for us and for me personally, Chris, this is harder of a trading environment for a near-term trader. An environment like this, where it's a one-directional market, it's very hard to get in with any type of conviction against the stop because the market's just running. This is where swing traders are really going to rule the day. But for us, these rebounds, reversals, tags of support, opening range breaks, these are where intraday trading really is your best, in my opinion, is going to be your most versatile strategy. So I hope that helps. Let's look for Gary at the dollar yen. Haven't taken a look at dollar yen yet. The abomination is on the menu these days, specifically on the back of all the event risk we're looking at. Just want to note that sliding parallel we noted yesterday actually did hold earlier in the week. You didn't see that dip into 116.46, which is what I wanted to see. This is a long-dated 1618 extension from the descent off of last year's high. And you also had the confluence with the sliding parallel there and the actual median line a little bit lower on. Didn't quite get it. So this rally now testing the low day close, okay, for August, which is 118.36. That was that August 24th massive rip that really killed risk assets. Saw a massive decline here. We're testing that as resistance. On the near term, don't really have anything too compelling. The only thing that I wanted to show you guys was this. We added this on in the webinar yesterday. So it looks like it continues to guide price pretty well. We've just made a basic 236 retracement of the decline off the highs from November. So we're just at the first basic retracement. I know this looks very messy, this chart, guys, but it's dollar yen. The abomination does price action like this sometimes. So keep your wits about you. But I do think you'd need to see a breach above this 118.50 barrier to start looking recovery. Other than that, it's a downtrend that's just simply making a near-term recovery. I still look lower towards that 116.46 mark. In the meantime, I think you might get some recovery first. Let's see if there are any triggers here. Maybe back into the median line even. Yeah, that's what I'd be looking at. The recovery is that initial resistance, Gary. Again, I don't really have any positions that I've taken on this for a couple of weeks. Looking at the ATR, it's only about 22 pips, so keep that in mind. You're coming into initial resistance. Honestly, from here, and again, this is just I'm just giving you my personal opinion here, Gary. I don't really think that dollar yen, for me at least, is something appetizing at this point. But what would be interesting for me is if you get a near-term pullback, there is an opportunity, I think, to get long to try to go for that median line. If we get just from here a break into that median line, a stop against that Friday high, if you get a short trigger giving out, might be a nice pullback into that trend line. But certainly the risk is still for a little bit more of a recovery higher here in dollar yen. All right. Does that make sense, Gary? As far as the Nikkei 225, here's what the Nikkei looks like. Ooh, that made it through that barrier. Okay, so look, we were looking at 117.4 or 17,490 into 17,560 as that area of support. We broke through it. It was serving as resistance yesterday. It's exactly where we peaked and then closed lower. Here's the breakthrough. So I do think you can actually stage a little bit more of a recovery here, which falls in line with what we're looking at in dollar yen, right? Okay, now I'm going to go ahead and get rid of that 618. And this 1893, this is actually the 2014 high, swing high. So I just want to leave it there just as a reference point. It's not going to be something that's really been a major pivot in price, but certainly you want to keep in mind those major key highs here. So 2014, there's the high right ahead of the 2015 open. I'll just keep that on there for now. These are the levels I'll be looking at on the daily chart, though, for the Nikkei. The risk with a break above here is for a move back towards the origin of the breakdown. That's like 18,205, 18,075 or so. Okay, so long story short, Gary, to put things in plain terms, man, you could see a little bit more of an upside swing here, but broader trade still remains weighted to the downside, broadly speaking, sub 18,205. Gary, does that help? Does that make sense? He says, it does. Many thanks. Much appreciated as always. Cheers, Gary. Always good to see you in the room, my man. Mustafa says, good morning. How about Aussie yen? So, Mustafa, we went over Aussie yen earlier in the session. I don't want to go over it again. I'm just going to show you the charts really quick. You can see the archive of this. I'll have it up as soon as we're done. The only thing I wanted to highlight to the guys here is that 83.68, 83.66 is the next major resistance there that you want to look for on the breakout for Aussie yen. Really active on this pair. It's been pretty good. It's been pretty good. So still looking for that stretch into 83.60. Okay, so we did Aussie, Euro, Kiwi, Sterling. We covered that multi-decade trendline support. So I don't. Again, Sterling is on the radar for me by all means. I have not really had too much conviction in playing Sterling dollar. I love playing Sterling versus the crosses. And I think that's where to be right now. I think this is too dangerous of a level to start calling the low on Sterling. It's a professionally traded market. This thing is an oversold territory on a daily basis, guys. So despite the fact, again, despite the fact that we're at that multi-decade trendline support, momentum on a daily basis is in oversold territory. And what do we say about this? Something can stay oversold for a day, a week, a month, a year. Nothing says it has to come back. It's the act of coming back from oversold to the break above 30 that would be the recovery play. So although we're coming to support in price, momentum looks pretty bleak. So I just don't have it in me right now to try to fight that trend. I do think, again, my personal humble opinion is I do think you do see some sort of rebound off that line. Maybe it rips it a little bit lower into that 142 region before it does to shake out all those hands before it, surges higher. Typical classical thing to do with the sterling. So I'm a little more hesitant, but looking for this broadly to see some sort of near-term bounce. Other than that, Euro dollar, we haven't talked about that here in the webinar of the last couple of days. I just wanted to give you a quick update. That basic support that we talked about last week, key support near 107.33, 107.23 held. The rally extended into 109.25. This remains the bearish invalidation level, if you guys remember from last week. So although we probed through it on Monday, we pushed off rather nicely. So I'm looking lower sub 109.24 from a scalp basis. I do think that this pullback offers a nice entry for the long side again. And that's going to be with a break above this. Okay, so now that we're sort of based along the 618 retracement, momentum basing at 40, unable to make any concrete drops, ongoing divergence in price, lower low, lower low, lower low, lower low, equal lows is still divergent. Necessarily doesn't have to be higher lows. But all you're looking for is that the oscillator is not reflecting a new extreme in price. And there's a trend line trigger that dates back to last week. So if we see a pop through that, and we see a pop through this rear-term resistance, look to play the recovery. I'm all over it. I wouldn't play the breakout. I'd look for that breakout to pull back, try to get a stop against that low, and try to see if you can get a stretch towards 108.84. Again, bearish invalidation, still 109.25. And although we peaked above that last week and this week, I'm still comfortable calling that the near-term bearish invalidation. Any questions on Euro? Oh, Mustafa, I didn't even see your question and I already answered it. You see that? So it is coiling up here. I do think you get the top side break. Again, I know that, excuse me, I know that from the swing side of things, you guys are also holding or looking for that long breakout as well in Euro. Okay, the stop for the Euro long is 107.92, so just keep that in mind. I like this thing higher above that 108.90 near term on a breakout position. If we break below this, the next level I have on tap would be right down here at 107.70. I think 107.92 that he's looking at there is the low day close or the reversal close day. So watch those levels to the downside. You are showing some divergence. If you see that trigger break and a move above 108.40, look to play the recovery higher. Such a scenario, guys, it's always prudent. Just to tack on a quick retracement of the near-term decline, gauge what your first levels of targets should be. So if we do that, and again, this is just a drill here for you guys. We don't have concrete acknowledgement that this is a low, but let's just say if this does break the highs, look for 108.67 as your initial target, 108.86 as your secondary target. And keep in mind, quarter of the daily ATR is about 25 pips, so you're looking about 100 pips on a daily basis. Still like the Euro CAD short? Asking Mark. Yeah, I do. On this one, yesterday was really frustrating. I'm not gonna lie to you, Mark. I got stopped out twice on this, trying to call that high, and certainly near sitting back here looking at things in hindsight, it was kind of stupid because I just threw out the rule book, which I always tell you guys, divergence doesn't mean jack. This can happen for months before the divergence actually causes or triggers a turnover. So just because we're making divergence into these new highs, it's no reason to start pressing a short, especially from a scalp basis. That being said, here's what the intraday chart looks like for Euro CAD. All right. There's a couple of different median lines I was working with yesterday. I took the short early on. It actually panned out pretty well. It only gave me like 38 pips, 10 shy. I should have done something, didn't on the rally here, stopped at break even. Again, I tried to short it on another break here lower last night. That got stopped at a break even, like literally to the pip on that rally. So I just haven't been able to do anything with this, Mark, as far as the Euro CAD's concerned. I do like a little bit of a play lower, but the CAD is just ridiculous. It's like the new abomination trade. Here's what dollar CAD looks like, just for reference, guys. It's not prudent. I know there's millions of people out there trying to call the high on this thing, but it just keeps popping through every resistance range. Remember 42.08? We talked about that last week. It seemed like that would be an area of which, yeah, let's start looking lower. Finally, here we are again. A breach of this high that we made yesterday, and there's nothing on tap that I have until like 46.60. It's a ways away from where we are now. It's over 300 pips. Momentum isn't overbought. This is not when I want to try shorting it. Momentum can stay overbought for a month, a year, a decade, however long it wants to. So the loony crosses in general, Mark, have sort of turned me off. It's not really a sexy trade for me at this point. Psychologically, everybody should have given up on the CAD weakness, but yeah, SSI is still high. Yep. So I guess we'll have to wait and see here for the CAD. We were looking at CAD yen earlier in the week. I just wanted to see what that looks like at this point. Here we go. On the daily chart. So, I guess let me show you this. So near term, the only thing I want to highlight for CAD yen, which also gives you a decent mid-range ATR, 27 pips per scalp, is the fact that we've been holding this channel off of the December high like clockwork, literally. I don't think there's a buy sector here that is too helpful. Maybe. But my point being is you've been riding this low, this trendline support, as momentum is making divergence. So the risk for a rip is still there. It's just that, CAD weakness just doesn't want to give up. If you look at this from a daily standpoint, points out something a little bit larger in play. Here's that longer dated ML formation that we've been in. I think you can see a little bit more of a drop towards this region here. And that's right around like the 8150 region. So starting the week, I wanted to see if this support was going to hold. Obviously, now it's acting as resistance, that 8293 level, which is the key 618 of the entire advance off the lows from, I thought it was 2009. Yes, off the 2009 low. Big region. Okay, Mark says, great, thank you for your opinion. Cheers, Mark, anytime, my man. One last thing before we wrap up the session. We are over on time. Just a quick look at the commodities, guys. I just wanted to highlight one thing. Gold is at support. Watch this here. If gold breaks this low, You're like, oh, it actually bounced off it already. Okay. So before the webinar, we were trading right at that region. That is pretty critical for gold near term. I'm looking higher above that 1079 level. This is the former 618 extension of the advance. This is the 50% retracement of the advance off the December low. Also, very nice pivot in price. Look at the lows that you made back low in July, the highs that you made towards the end of December, and the median line all right here. All right here. So watch 1079. I am reluctant to be on the short side of gold while above that region. I think you can see a move higher from here, so watch that. As far as crude is concerned, people are going to be talking about that decline, no doubt. Here's what that looks like on the daily chart. And I just wanted to highlight again, there is a little bit more room if we do spike to tag that lower median line parallel before we move off. If we close back above that 31.28 level, 31.38 level rather, I would be looking for a rally back towards that 34.40, the lows from December, a basic 50% of the retracement of the advance. Sorry about that, 34.13, and the median lines off the high here, all coincide right there. So watch the com block, and especially if we're seeing a rebound in risk and rebound in broader risk assets, likely to see some give here, both in gold and crude. All right. Guys, don't forget, don't go anywhere. Later today, 1 o'clock, you're going to have Mr. Jamie Setley, my good friend, on for the midweek strategy webinar, 1 o'clock Eastern here. Go over some of the swing trades he's been following and the outlook moving into next week. Guys, have a great day trading. Best of luck. I'll see you tomorrow morning. Cheers.